Want to get into real estate, but have no idea where to start? In this video, I'm walking you through exactly how to start investing in real estate, even if you've got zero experience, limited cash, and no connections. These are beginner-friendly steps anyone can take to get their foot in the door. Before we dive in, make sure to like, subscribe, and hit the notification bell, because the earlier you start learning, the faster you can build real wealth through real estate. From house hacking to REITs to rental property basics, we're covering what actually works in 2025 and how you can get started the smart way. Understanding different types of real estate investments. Before jumping into any investment, you need to understand your options. The most common entry point is rental properties, where you purchase residential properties and rent them to tenants for monthly income. This creates both cash flow and long-term appreciation potential. Fix and flip properties offer quicker returns but require more hands-on involvement and market knowledge. You buy undervalued properties, renovate them, and sell for profit. Real estate investment trusts, or REITs, allow you to invest in real estate without directly owning property. These publicly traded companies own income-producing real estate and pay dividends to shareholders. Wholesaling involves finding distressed properties under contract and assigning that contract to another investor for a fee. Commercial real estate includes office buildings, retail spaces, and apartment complexes, typically requiring larger capital investments but offering higher returns. Building your real estate education foundation. Knowledge is your most valuable asset in real estate investing. Start by reading foundational books like Rich Dad Poor Dad by Robert Kiyosaki and The Millionaire Real Estate Investor by Gary Keller. These provide essential mindset and strategy frameworks. Follow reputable real estate podcasts such as Bigger Pockets, Real Estate Rookie, and Investing for Beginners to stay updated on market trends and strategies. Join local real estate investment groups and online communities where experienced investors share insights and beginners can ask questions. Many cities have real estate investment association meetings that provide networking opportunities and educational workshops. YouTube channels from established investors offer free tutorials on analysis techniques, financing strategies, and market evaluation methods. Consider taking courses on real estate analysis, property management, and local market regulations. Understanding your local laws, tenant rights, and investment regulations is crucial for avoiding costly mistakes. Subscribe to market reports and real estate publications to track trends in your target investment areas. Analyzing your financial situation and setting goals. Successful real estate investing starts with honest financial assessment. Calculate your current net worth by listing all assets and liabilities. Determine your available capital for investments, including savings, retirement accounts that allow real estate investments, and potential loan amounts. Most conventional investment property loans require 20 to 25% down payment, so plan accordingly. Establish clear, measurable investment goals. Do you want monthly cash flow, long-term appreciation, or both? Are you targeting financial independence in 10 years or building retirement wealth over decades? Your goals will determine your investment strategy and property types. Create a realistic timeline for your investments. Consider your current income stability, family obligations, and risk tolerance. Young investors might focus on appreciation-heavy strategies, while those nearing retirement may prioritize steady cash flow. Document your goals and review them regularly to stay focused and motivated. Exploring financing options for new investors. Traditional financing through banks and credit unions typically requires good credit scores, stable income, and substantial down payments. Investment property loans generally have stricter requirements than primary residence mortgages. Expect higher interest rates and larger down payments for investment properties. Private money lenders offer more flexible terms, but usually charge higher interest rates. These relationships can provide faster closing times and more creative financing structures. Hard money lenders specialize in short-term loans for fix and flip projects, offering quick funding but expensive rates. Seller financing allows you to make payments directly to the property owner instead of getting traditional bank loans. This works well when sellers want steady income streams or have difficulty selling through conventional methods. Partnership arrangements with experienced investors can provide access to their credit and experience while you contribute time and effort. House hacking involves purchasing multi-unit properties, living in one unit, and renting others to cover mortgage payments. This strategy allows you to use owner-occupant financing with lower down payments while gaining landlord experience. FHA loans can sometimes be used for small multifamily properties with as little as 3.5% down payment. Finding and evaluating profitable investment properties. Location research is fundamental to successful real estate investing. Study neighborhood trends, school districts, crime statistics, and future development plans. Properties in areas with job growth, population increases, and infrastructure improvements typically appreciate better. Drive through potential neighborhoods at different times to understand traffic patterns, noise levels, and overall atmosphere. Learn to analyze deals using key metrics like cash flow, cap rates, and return on investment. Cash flow is monthly rental income minus all expenses, including mortgage, taxes, insurance, and maintenance. Cap rate divides annual net operating income by property purchase price, helping compare different properties. Cash-on-cash return measures annual cash flow against your initial cash investment. Building your real estate investment team. Successful real estate investing requires a strong support team. Start with a knowledgeable real estate agent who understands investment properties and can help you find deals. They should be familiar with rental markets, neighborhood trends, and investor-friendly financing options. Find a reliable accountant familiar with real estate tax implications, depreciation schedules, and investment property regulations. Real estate offers numerous tax advantages, but proper documentation and strategy are essential. Your accountant can help structure investments for optimal tax efficiency. Taking action and making your first investment. Start small with your first investment to gain experience without risking everything. Consider single-family homes or small multifamily properties in stable neighborhoods. These are easier to finance, manage, and sell if needed. Avoid the temptation to buy the most expensive property you can afford. Instead, focus on solid fundamentals and positive cash flow. Create a systematic approach to property evaluation and stick to your criteria. Set maximum purchase prices based on your analysis and don't get emotionally attached to properties. Remember that real estate investing is a business, not a hobby. Be prepared to walk away from deals that don't meet your requirements. You don't need a license, a fortune, or a background in real estate. You just need the right game plan. Which strategy are you leaning toward first? Renting, flipping, or investing through apps? Drop your questions or goals in the comments. Let's grow together. And if this gave you the clarity or confidence to take that first step, make sure to like, subscribe, and share it with someone who's ready to start building real assets. Until next time, stay consistent, stay curious, and remember, you don't have to know everything to get started. You just have to start.